Welcome to our series SMSF Essentials. My name is Alford and I'm the SMSF Specialist here at Walsh Accountants. I've worked in the accounting industry for over 16 years, with the past decade dedicated to specialising in self-managed superannuation funds. I'm a CPA and hold a bachelor's degree from Griffith University here on the Gold Coast. In addition to self-managed superannuation, I also work closely with clients around estate planning and family office services, helping clients structure and protect their wealth for the long term. Today, I'd like to discuss the key differences in control and investment options when considering a self-managed superannuation fund in comparison with an industry fund. This is something that we often hear at Walsh. Should I stick with my industry fund or retail fund? Or should I set up an SMSF? Well, there is no one-size-fits-all answer to this question. But to really understand the difference, you need to go deeper, particularly than just, say, fees or performance. The key differences really come down to two things: control and investment options. When looking around that level of control, if you're comparing, say, a retail or industry fund, you essentially are a customer of a managed superannuation fund. You can choose from a menu of investment options, usually pre-mixed, diversified options, say balanced, conservative, or growth, and sometimes direct shares, ETFs, maybe even term deposits, but you don't control the underlying investment strategy. The fund's trustee makes those calls. You're just along for the ride. When comparing to, say, an SMSF, you are the trustee. You control everything. You decide exactly what to invest in, how to structure your portfolio, when to buy or to sell, and how to tailor the fund to suit your goals. This is real hands-on control, but it also comes with legal responsibilities. When comparing, say, the breadth of your investment options, it's much more narrow when looking at an industry or retail fund. You are generally limited to the fund's investment menu. No direct property ownership, no collectibles, no crypto, with very few exceptions, no derivatives for advanced strategies. You also can't structure loans or complex estate planning strategies inside these funds. The options are largely preset. When looking at an SMSF, the investment universe is almost unlimited, as long as you comply with the super laws. You should be able to invest in it. This can include direct residential or even commercial property, for example, buying a business premises within your superannuation fund. You can have listed Australian or international shares, ETFs, fixed income, your bonds, your term deposits, cryptocurrencies with obviously strict controls, unlisted trusts or private companies, even collectibles and very specific assets. So basically, if it is a legal investment under SIS law, and if it fits to your investment strategy, you can consider it in an SMSF. When looking at, say, your strategic flexibility, these are generally a little bit more limited with your industry or retail funds. You have limited options for tailoring your fund for tax, estate planning, or asset ownership strategies. The fund handles tax reporting and benefit payments according to standard processes. When comparing to an SMSF, you have a much higher flexibility for tailored strategies. You can optimize pensions, implement tax-effective drawdowns, use gearing, or even structure ownership in ways that support your family succession or estate planning goals. Ongoing involvement that can be required around industry or retail funds, well, it is a lot lower. You choose an option, you monitor your performance, and you update beneficiaries. The fund does the rest. When comparing to an SMSF, it is a much higher level of involvement. You are the one that's responsible for compliance, documentation, and ensuring that every investment decision aligns with your legal duties as trustee. Many people love this, but if you're not engaged or you don't have the time, it can definitely become a burden. If you're somebody who wants a complete control over how your super is invested, from the assets you hold to the strategies you use, an SMSF can give you that flexibility. But with greater control comes greater responsibility. On the other hand, if you prefer a hands-off approach with less involvement and built-in simplicity, an industry or retail fund may be more suitable. There is no one-size-fits-all solution. The right choice depends on your goals, preferences, and how actively you want to be involved in managing your super. If you are weighing up your options and would like to find out more about self-managed superannuation, the team at Walsh Accountants are here to help you explore what's possible and support you in making informed decisions about your super and your future. We hope you found this episode of SMSF Essentials valuable. In the next episode, we'll answer one of the most common questions we hear. What's the minimum balance you need to make an SMSF worthwhile? Stay tuned. We'll see you then.